The stock market fares better this week than it did last week. Friday's losses capped another brutal stretch for the main indexes, which suffered their second largest weekly losses this year. Certified financial planner Joe Bert joins us now to talk more about it. Joe, good morning. What a couple of weeks we have had on the markets. I mean, this is... It's not, I don't know that it's historic, but there were times where it was approaching
we've had 1,000-point intraday drops. We had a couple of days collectively, which set some records. Yeah, I used to have dark hair.
Yeah, before these last 2 weeks, right? So listen, I have to tell you, I've honestly never paid any attention to the Chinese markets.
Right. Well,
before about 10 days ago.
It's really what's in the financial news right now. The financial markets are always looking for something, and it's China, and it's of course what the Fed's going to do here very soon in terms of raising interest rates. You've got to remember though, Tom, if you look back in the markets, we hit our low in March of 2009, and we've had about 6.5 years of pretty rising and steady markets. So when you have these big swings like we had, all of a sudden it gets people's attention.
Yeah, I keep hearing the word correction thrown around. What exactly does that mean?
It's a 10% drop. And when we are officially in correction territory, but that happens. You know, you have a correction. The problem is we haven't had one for a while. It's like hurricanes. You know, you forget what it's like. It comes along. Oh my gosh, how do we ever deal with this? That's all part of life. It's all part of investing.
The immediate future. I know you'll always tell us that you're going to have ups and downs in the market.
Yeah.
The immediate future, the next several weeks. What do you think it's going to be like?
I think it's going to be a little choppy. September generally is, and depending on what the Fed does, I think it's going to be choppy. But once again, if you're investing, as you are in your 401k, I know it's good news for you.
Why is that?
Because the name of the game over your working lifetime, Tom, is to get shares. When the market goes down, you buy more shares. I like to say the stock market is the only market when the price goes down, everybody runs out of the store. That's not what you do when you're investing in your 401k, because you're buying more and more shares. The name of the game over your working lifetime is to get shares. You want to stay in there.
Does the 401k, the way they're set up, do they automatically buy those shares?
Yeah, automatically. Every time it comes out of your paycheck, it's going to happen for you. So really, the ideal situation is, while you're putting your money in your 401k, you hope the market continues to go lower and lower and lower, and just before you retire, it goes up a little bit. You'll do far better than if it never went down. Believe it or not, I can show you it graphically.
I mean, it makes sense. Yeah. Right now, your 401k is buying low, and then it's going to go back up, so you're going to make money.
Exactly. The problem is we're all emotional. We let our emotions, we think the world's going to come to an end. I want to tell our viewers, this is not a repeat of 2008, 2009. Okay. The world is not coming to an end. Stay the course, and you're going to be okay.
Right. How do people find you?
Just Google me, Joe Bert, B-E-R-T, 2 words.
All right, Joe, good to see you.